Good afternoon, everybody. Welcome to TraderMerlin Show for your Friday edition. Trading week wrap up. An exciting week it was. Cheers to everybody out there. What are we going with today? This was it's called Surf City. It's a local Huntington Beach distillery in California. So cheers, everybody. Hope you had a great week. Let's get this show on the road so we can go on with our weekend. Okay, so the graphic. Normally I like to have a graphic that's very timely and has to do with everything for today or this week. I chose kind of a hodgepodge multi-graphic here that really just is showing charts and abstract. So not really on one specific topic. Most of the show today is going to be driven by your questions. I had quite a few of them that came in. Before I dive into anything, I'm going to just give one last little plug. Well, plug all next week as well. Obviously, I will not be doing a show for you guys on Thursday, but I will be doing a show in San Francisco. I will be there on the 9th. Doing a presentation, I believe at 10:30 or 10:45, and talking about cryptocurrencies, building portfolios, things like that. So if you are in the Bay Area, hopefully we'll see you there. If not, well, we'll see you another time. Okay, so what questions do we have? What do I want to get into? I got a lot of different things. We could talk about the overall markets. Obviously, I'll start with just a run through of what happened today. Nothing that was normal. It was a crazy, wild day. I had several levels mapped out for you guys that I thought were significant, and I'll be honest. It looks like I have... Are you seeing anything? Anybody seeing anything? It shows I have no stream going. Excellent connection. Yeah, okay, there it goes. That was weird. It was showing me I had nothing connected. If we look at this one here, we mentioned this, the dollar index, which I'm long-term bullish on for many of the reasons we discussed yesterday with Bill Addis, which was looking at the Fed unwinding their balance sheet and just kind of pushing this dollar higher by removing dollars from circulation. Now, of course, over the past 3 days, had a pretty significant decline here for that dollar index. I thought we would stop at 105. Now, the good news is we actually hit 105 and have not closed lower than it, but that long bottoming tail there should make anybody here who's a believer in supply and demand zones. There's no demand left here at 105. It's just simply a psychological thing that we're closing above 105. But if there were actually orders out there, of course, there are no orders for the Dixie dollar index. It's just an index. But if there were orders for there, it would long be gone. Hello, Obioma. Good to see you, my friend. So that's your dollar index was your worst performer, down a quarter of a percentage point. And really, actually not the worst. This was your worst performer. This is one that I pointed out on yesterday's show, saying we really should hold this 4.57% mark on that 10-year. Otherwise, we could see it drop quickly to lower levels, and all of a sudden we broke today. So markets must have been listening to me. So Big Eb is still potentially got a shot here. It is 3.99%. That's a long ways away. The yield on that 10-year would have to drop between today and the end of the year. It'd have to drop roughly 11.56%. I don't think that's going to happen, but stranger things have happened, and Big Eb's been pretty right on some of his calls over the past year or so. We'll see. So if we look at this 10-year, you're probably thinking, well, Merlin, where do you think it's going to go? Well, I don't think it's going to get down to this origin of the breakout, which is between the 4.32 and 4.35. I just don't think it's going to drop that low, but it sure could. If it does, I think that will be your bounce point, but I don't believe we'll get down that low. I think we'll probably turn here over the next week and start to challenge that 4.7 mark again. But who knows? Stranger things have happened. That was your worst performer, followed up very closely by crude oil, which continues its slide. Now, the tail from Tuesday's session, just a ridiculously long bottoming tail there. For me, that would erase my levels. So let me real quickly just show you on the 15-minute time frame. I'll go out here and look at this. And that tail was my drawing. Ha, 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 ha. Okay, so there we go. We did not have a long tail. That's why I wanted to show you. That's why I always look at time frames. By the way, for those of you who have ever seen a chart like this, where you look at a daily time frame and you see just an oddball print like that, like I just showed you here. If you ever see something like that, that's that oddball of a print, always open up to a smaller time frame. Because I had drawn out this head and shoulders pattern on crude oil, and what I had done is I had used this measuring object like I love to do, and I will show you that here, and it actually fooled me today. And I would go down here to my neckline, and this would actually be where I anticipate things going to on this breakdown based off of the head and shoulders pattern that you guys can see here on the screen. So that was not a line there. Sometimes you will see a bad print, and it just shows up as on a 1 minute time frame as one transaction. occasionally that's bad data that's just stuck in the system that gets processed out. So right now we are coming into an area that I actually am interested in, which is why I wanted to bring up crude oil, and that is right here, which we are pretty much dropping into. It really starts between that 76.80 mark all the way up to, call it $78. So it's kind of, $1.20 range is still pretty large, but that's kind of where I think we would end up stalling based off of supply and demand. The break of the head and shoulders pattern, which is formed there on crude oil, would take us a bit lower to the lower end of these bottoming tails that go all the way back into February 15th of this year. So all in all, I think that even though I did not expect crude oil to fall this quickly and this far, I do think that you'll probably see a bounce next week on crude oil, which may make for some interesting longs. So that was your, fifth place finisher, moving our way up that list to the positive stuff at least. Gold, there's nothing here to speak about with gold for the week. It's down overall for the week, but today's session, it's a long topping tail and bottoming tail, which means indecision, nothing happened, not worth mentioning. Let's see, I'll keep going up that ladder till we get to the good stuff. Here's the Russell, which continues its nice streak. Had 3 fantastic days in a row. If you look at the percentage moves off of the low from April 19th to where we closed at today, great move. Almost 7% move up for the Russell. But the month is long from being over. We just started. It's a good opening run for the Russell, but I wouldn't get too excited on that one just quite yet. As far as where it may turn, you do have a drop-based drop that goes back to April 10th, which we knifed through today, which now means you're putting your focus and the onus of this trade would be somewhere on these peaks that happened back on April 10th. So 2100 would probably be that next logical target for a supply zone bounce down on the Russell. Third place, S&P for the day. Came right up to that little dash red line. Why is that dash red line there? Because that was the line in the sand for the break to the downside, and now we're retesting that one. So this goes back to what I talked about repeatedly over the past month, which has been an uptrend stays intact until it doesn't. An uptrend, once it's broken, does not mean that the trend is over. It just means that the present angle of that trend is over. What happens is typically you get a retest of a lower high, and then we make a new low. And we are in that pattern right now. Even though you guys see a nice rally that started from these lows on April 19th, it doesn't mean that this is an uptrend now. It means we're retesting. And if we can get above this 51.70 mark, okay, fine. That's going to be a nice positive sign for the market. But until we get back above 52.65, I'm still not bullish on this market until on this index until we break above that. That means we're breaking some previous highs, and we haven't done that quite yet. So there's your S&P. NASDAQ at 18,000 even on the close. Similar picture, came right back up to that point where it actually broke down before and caused a nice market sell-off. All in all, I do think you'll probably see downside move on Monday, even though you had such great news with Apple and broader market stuff today. There was one bad piece. Well, actually, let me finish this first. Here's your bounce up for Bitcoin. I didn't think this was going to happen. I thought we'd see it drift a little bit lower, but there's a couple big whales. They call him Mr. 100 is kind of this big whale out there who's accumulated thousands of Bitcoin over the past 48 hours. So that's a great sign. It's one of the more watched wallets out there is watching Mr. 100's wallet. And he bought a lot of Bitcoin, which changed the sentiment and the narrative on this one. So I still feel like there's going to be more downside pressure, at least for the next couple weeks until we really turn the corner and then challenge the all-time highs. Someone asked me, when do I think we'll be at 100,000? I think we'll be at 100,000 probably by the end of this year. If not, it'll probably be early January. I think after the elections go through, we'll start to see the really big moves to the upside. So, all right, that was it. A quick and dirty, fast run-through of your top 7 markets because I'm not going to do an hour show for the weekend. I don't have Tom here. I got no Big Eb. I take a couple days off and they abandon me. I see how it is. Whew. Les says, Merlin, on the TRY, is it possible that the topping tail was only used to run the stops in supply zones? I was like the TRY on the Russell. It could be. The challenge with that, Les, is it sounds simple to there you are, Tom. Good to see you. It sounds simple to move a price up and hunt stops, right? How much money do you think it would take for you to move up farther, to move up an index enough that you're actually going to break stops and trigger stops? I mean, that takes a colossal amount of capital. If I was to take something like an Apple, an Intel, GoPro, Snapchat, a single stock, I can knock that down. I can knock that around with a good amount, with a smaller amount of money. But to move the Russell that has countless futures traders, it's got obviously people trading futures and options on the index of it, and then also you have the ETFs out there. You're talking 100 times normal to move that index. So I don't think just based off of volume that this was a move to take out the stops. I don't think that was the case. We could look at it here and go interminute and go to like a 5-minute time frame. And you see the move that happened here on the open. Right? That was your opening move, and I don't think that was necessarily due to people taking out stops, although it happened real quick. I mean, this is a 5-minute bar here. Let's make it a 1-minute time frame to see. But I don't personally think that was done with the intent of taking stops out. Could they have done it? Sure, it's always a possibility. But that was a 60-second bar that happened at 5:30 this morning on that unemployment. Was unemployment? Let me check the econ. I know the unemployment number came out today, which is higher than expected. Just making sure that came out at 6:30 Pacific time. Yeah, so you had that unemployment number and that non-farm employment change came out at 5:30 this morning, and that was just the knee-jerk reaction to it. Was it designed to take out stops? I don't think so. I don't think so. Okay, so that's my top 7. Great question, Les. Do they hunt stops? You have to look at it from the perspective of what's the benefit for an institution to hunt a stop. Are they hunting your stops, right? Like, I don't know, Les, maybe you're trading 100 or 1,000, a few thousand shares. I am too. I don't think that they're concerned with me at all. I think that they are looking for the bigger picture where there might be, more institutional levels for the stops or more retails collectively, but really taking out a big bulk. I don't think you'll move an index to do that. It's too much capital to knock it down. If you look at that video that I encourage everyone to watch before it finally disappears from the internet altogether, which is Jim Cramer. Just go to YouTube, type in Jim Cramer manipulation. Let me make sure it's still there. Maybe I'll even post the link for you guys. Hold on one second. Let's go to YouTube, and then we'll just type in Jim Cramer manipulation. So when you click on that, there it is. So it's right here. I will copy this and put it in a chat. Don't watch it now. Save this one for later. Oh, hey, there's Todd. Look at old Todd Davis. He's so nice. There you go. So I just posted that in the chat. Don't watch it now. It's one of those things you can check out later. But when you watch that video, he talks a lot about what you create an impression on something and you knock it down and you move those markets around. He's always talking about a single stock. A single stock's easy to knock around. Very difficult to move an index. That's so much more capital to move a market because so many other market forces are hinged to that market index. S&P, NASDAQ, Russell, Dow. Those are really difficult to force a movement in. Not impossible, but just the sheer amount of capital probably wouldn't make it worth the risk involved. If I'm a market maker, I'm going to go after a thinly traded stock like ARM, right? We talked about ARM, how it had very little liquidity before their stock options could be exercised and before those shares could come to market. Very illiquid, easy to manipulate that type of thing. So it's easy to go in there with $10 million, create a huge impression that this market's moving up, get people in there to buy it. You issue press releases, how great ARM is, and you're just loading the boat short as these buyers come in, and then all of a sudden it just breaks the camel's back, and easy to do that type of stuff. Let's see. Not to run up, but after it got close to the zone, it was pushed a little higher, like seeing that the volume momentum is stalling or turning. Possibly. I still hold to my gut feeling that indexes are just too difficult, too much capital to do that with. Russell's the only market index that isn't overly weighted in a handful of stocks like the manipulated ones, manipulated 7. Yeah, that is nice that the Russell has much more dispersion amongst them. However, a lot of the individual components of that are very thinly traded. So they're low liquidity for the individual components, but there's so many in the Russell 2000, it's hard to manipulate that index. So yeah, you could manipulate, I think S&P or NASDAQ a little bit more if you just really took a lot of firepower at an Apple or a Microsoft because they're the two kings, right? So if I took $10 million and did a bulk market sell order on Apple, I'm going to create a big spike down instantly, and that will create some shock in the market, and I might get some follow through, but that's a big risk, big risk. And Jim Cramer is the manipulator. Well, he's certainly one of them. I'll give it to him. Yesterday, you guys may have seen his interview with the CEO of Starbucks, which I did sell some puts on Starbucks, by the way. The CEO interview was great. He just ripped him to pieces, and it goes back to this question. That's kind of want to dovetail into that conversation. This came in from John G. He says, I was wondering if you might be able to add clarity to how quarterly earnings are reported. I'm trying to wrap my brains around how there can be different earnings per share numbers thrown out depending on which platform I reference. For example, I noticed on the MicroStrategy Q1 Thinkorswim numbers, Earnings Whisper shows a loss of $8.26, and TradingView reported $3.09. Which one do I believe? The same just happened with Z. Thinkorswim showed 36 cents. Earnings Whispers reported a loss of 24. TradingView shows 33 cents. Are these numbers are they coming from different reports? So, two things there. Number one is every firm is going to pull from different analysts, whether they're using their own internal analysts to come up with a market forecast and anticipate what earnings are going to be, or they're buying someone else's reports and using that. Those are always going to be different. Remember, all an analyst has to go on is the information that they have been fed, which is why Jim Cramer was so pissed off at the CEO of Starbucks. He's like, you guys knew that this was going to be an atrocious quarter. You should have warned earlier. This isn't something that just happened. You knew that this was a colossal miss on your part. You should have been disclosing this. And, coming from Jim, hearing about disclosure and things you should have done to be fair, transparent, and open, kind of pot calling the kettle black over there. But that's okay. We'll let him slide for that one because he did put his feet to the fire and really grill him on it. As far as the actual numbers coming out, there is an earnings per share, an EPS number. That's the final that the company reports, and that should be the same on all the sites. Now, there's different metrics. There's earnings per share. We could go and look at all the different metrics, but there's so many different numbers that are reported. So you might not be looking at the exact same number, but after the fact, when you look at earnings per share, EPS, then that's a definitive number that every platform should have as the same. Now, there may also be a delay between when your platforms, whether that's, you said Thinkorswim and Earnings Whispers, there may be a delay between when that earnings comes out and when they report that number. It might not be put up instantly, right? It might be the next day or a couple days to get them to update their website. So you may be looking at the previous quarter's earnings per share or announcement. So for the most part, I don't care what the numbers are. I just watch them to see if they're going to beat them or miss them, and then I trade the price action after that announcement. Merlin, did you sell any silver puts today? I looked but couldn't find any premium. I didn't sell any today. I sold 8,000 worth the other day at the 23.50. So yeah, nothing today. I was thinking about it, but I'm gonna hold off a little bit. I think silver might go a little bit lower here, which will allow me to maybe get some at the 30 or 23, maybe the 22.50. But maybe next week we'll get a better chance of what that might be. But no, I did not sell any of it today. I made no new trades today. It was a content creation day for me. But let me real quickly bring that one up since you're on that topic, Larry. Thank you. SLV. So you look what happened out there yesterday. You had that nice little drop down. I sold mine. I want to say it was Tuesday. I can't remember the days anymore. But after you had that nice big drop down, I did sell some puts on SLV. I sold 80 puts, which again equates to 8,000 shares of SLV at the 23.50 strike, expiring on the 17th. I got well over 1% on that one. There you go. So I've got a couple more weeks. It could get there, but I'm fine owning silver again. I remember I got my silver taken away from me at 23.50, but I also collected a whole bunch of premium along the way. So I'd be fine to buy back in at 23.50. Kramer got the call from the you-know-who, the New World Order that rat out the CEO of Starbucks. Yeah. I think Jim Cramer's probably just upset because I think that he actually owned Starbucks and got caught on that earnings announcement. I don't think he will admit that, but his reaction was one of like personal attack. Like, you did me dirty and I'm kind of gunning for you. That's what it sounded like to me. So let me have another sip of this and I'll show you the Starbucks, which was down today. So I sold the $71 strikes on Starbucks, again, expiring on the 17th. Got some pretty decent premium on that one as well. But today, I probably could have done better. So I sold my puts after that earnings announcement back here on Wednesday. Sold puts on the 71. Let me show you why it shows the 71. So I'm going to go to a weekly here so it kind of looks nicer. If you looked off to the left and where current price is, not on a horizontal array, I want a horizontal line. There you go. This number right here, this very tip-top low is 68 bucks. Okay, that's where I wanted to go, but the premium wasn't that great there. You notice right here, this is 70. So 71 puts me right in a spot where I'm okay owning Starbucks right near those lows. Thanks, Gaines Blaze. Appreciate it. So that's where I sold my puts at. We'll see what happens. I've got another couple weeks. This is probably the riskiest trade I have open right now because it's catching a falling knife, right? I like Starbucks long term. There's a couple things that I think are going to happen here. You guys tell me, what do you think is probably the single biggest impact on Starbucks? What do you think is going to be like one of the major ones? What's going to impact them the most? So I'm going to bring it up here, and we'll go here to this one. Let me add it in. Boom, boom. I think one of the biggest costs to them is coffee. And coffee from October of last year through just a couple weeks ago went absolutely parabolic. Here's the chart. So here's coffee. Now, of course, there's different types of coffee. Inflation's a piece of it, Jared, but I mean, it's their business. What do they sell? They sell coffee, right? So if the cost of coffee goes up, then they're less. Are you quoting, what was his name? The teacher from UCI that just went to prison. I think he's, who I taught for. Oh my gosh, I can't remember his name. Antofagasta losers are in there. So here's the chart of coffee. And let me just show you how much this ran up. And this doesn't impact just one quarter, but the price of coffee increased 70% from October of last year. 70%. Now, I don't believe there's anybody in this room who would disagree with me that clearly this is having a big impact on Starbucks' sales. So let's just go over the past quarter, the quarter that has been destroying Starbucks, right? So if you look back, that's April. So if you go back to the quarter, it's going to be back into January, February, March, April. So let's go to February. So from February lows, coffee's up 36%. 36%. So for me, this, I think, had a huge part in Starbucks' earnings announcement. And I watched last week as coffee was falling aggressively. So was cocoa. Big drops in cocoa prices. We'll look at that here in a sec. Watching this over the past couple of days, the lower this gets, this will improve Starbucks numbers. So I'm actually hoping that this falls enough where I get executed on my Starbucks and I get filled at 71. I can't remember off the top of my head what my premium was. I want to say it was close to 2% for less than 3 weeks. So I was okay with that. I think it was $1 something, but I can't remember off the top of my head what I got it at. But this number here, while it's not important today, this will be impacting their next quarter earnings. I mean, if you look at how much it's fallen just in the past 2 weeks, the price of coffee has fallen almost 19%. And to me, oh, there you go, Peter Navarro. That's the guy. I will continue buying his so-so books, aka his legal defense fund. Yeah, Peter Navarro. I was shocked to see that he actually is going to do time for some of the things he's done. Wow. All in all, I really enjoyed working with Peter Navarro. He was he's blunt. He's extremely opinionated. I didn't realize the extent of his opinionatedness, but teaching over his class at UCI was a lot of fun. So, cheers. I'm sure you're not drinking whiskey today, Mr. Navarro. 4 months. Okay, so that was one of the positions I'm in. Again, SBUX, this is real dangerous. I'm kind of regretting one of my trades, or actually non-trades. I like my Starbucks, although I do think it's risky. I definitely think it has more downside move to go, but I would be content buying it at $71. Now, if you look at, what a discount I'm getting, I'm buying it off of 38% off those highs we saw back in 2023. I mean, we could go off the all-time high to look, make it even better, but that would be close to a 44% decline. I'm okay owning Starbucks. I don't think they're going to start closing up. I don't think America's addiction with coffee is going to disappear anytime soon, so I'm all right with that one. What else I want to show you? There was another one. Oh, Boeing. We talked about Boeing. Yeah, I really wanted to buy Boeing. I think I might have been a little too greedy here and waited. We were looking at that 140 mark on Boeing, and I was going to check and see if there's some premium. At the time, there was not enough premium to make it worth my while, and now I think I may have missed the boat on this Boeing. I think it'll probably turn the corner here and drift up. We just broke that high yesterday. That we broke the high from April 24th of last week. So, dang it. I'll be sitting on the sidelines, I think, for Boeing unless there's something dramatic. You guys, did you hear that a second whistleblower for Boeing tragically died? A surprise death. Another whistleblower. Boy, I tell you what, I have a feeling you give us 2 years, we're going to have a lot more clarity on what's going on, and I have a feeling we are going to see a movie about this. I think it's going to be great. Man. And who knows, that might be the piece that really does break Boeing. It might become some huge criminal investigation and murder for hire. And wow, great story unraveling over there with Boeing. Okay, so I answered John G's question. I want to go to this one real quick. And Michael, thank you very much for the comment. I don't take it personally at all. He says, I love your show and perspective, but I had to shake my head when you spent 30 minutes explaining how the markets can't crash quickly, but then showed a chart of a $2 trillion company moving 12% in just 5 minutes. This is not a criticism, just saying exciting times to come. Okay, hold on a second. I love the comment, and there's actually a second part to it, which was from Oscar. Oscar says, a black swan or atomic war could be much worse. Yeah, of course it could. No one wants to think about an atomic war, Oscar. You're right, but I don't want to think about that, right? If there's an atomic war, we're all just hoping that we don't die in the process. I could give a crap about my portfolio positions. It's like, how can I survive this? So, okay. Let me go into what I said, maybe to add clarity, because I know what I said, but I want to make sure we all understand this. When I said that the markets cannot crash quickly, that's because there are systemic pieces in place to prevent that from happening. We talked about this the other day on the show. These are the 3 circuit breakers for the market. If the market during market hours drops 7%, the market's frozen for 15 minutes, you cannot trade. Nothing. After that, it opens back up. If it locks down again, meaning it drops a total of 13%, not a new 13, but a total overall, they freeze it for 15 minutes. And if it drops 20 points at any moment in time, then the market is going to be halted for the remainder of the trading day. Now, you may remember that during the Black Monday crash, which was October 19th, 1987, the market did crash significantly. How much did it crash? 22.8%, I believe. So when I say that the markets can't crash, of course they can crash. They can go down quickly, but they're not going to go down more than 20% in one day. Now, let's be clear. This is off of the S&P 500. These circuit breakers I'm showing you here are off the S&P 500. So we technically could never have the same type of crash that we did back in 1987 with Black Monday, simply because there are now measures in place. Can we have a stock drop 30, 40, 50, 60, 70, 80, 90% in one day? Absolutely, you can. But that's an individual security. What I meant, and I believe I was clear on this, the market as a whole. There's no doubt. Hell, just look today. Let's go out here and look at the biggest movers. You had some stocks today. MNDI. Oh, man. How many of you here are glad that you were happy you didn't buy this stock? Mobile Health Network Solutions down 84% today. Right now, most of us wouldn't touch this because it was a penny stock to begin with. Well, it's a penny stock now. Here's a 1-minute time frame of this chart. No liquidity. Most of it happened on a massive gap down. Yeah, absolutely, you're going to see these numbers regularly in the market, particularly with thinly traded pharmaceutical biotechs. There was an 84% mover today. There is a 255% gainer today. Gotta love this beneficient. I don't know how to pronounce that one. You get this stuff all the time. So, Andrew, Michael, while I didn't mean to confuse you or make you shake your head at me, absolutely things can move more than 20%. The market as a whole will have a maximum of 20% per day. Now, could we get a lock limit down, meaning the market has dropped 7, then it drops another down to 13, and then locks at 20% down? Sure, we could get that. And then could it open the next day and lock and keep dropping and drop 20, 20, 20, 20? Theoretically, it could. For that to happen, you would have to have something like Oscar talks about. To me, that would be catastrophic. I mean, if we had, heaven forbid, I pray this never happens, but if a nuclear bomb is dropped somewhere in the United States, the market will lock limit down right away. You're going to get it to instantly peg down 7%, peg down 13%, and it'll peg down 20%. It'll be closed the rest of the day within 45 minutes of that event happening. Then we go through the overnight period, and then it can lock limit down again and lock limit, and it could do that day after day. I pray for all of us that never happens, because the amount of life lost in any sort of nuclear attack, and honestly, I don't even think it would matter what country it's in. If it hit the US, it would be the worst for our markets. But if we saw a nuclear bomb fall in Israel or Iran or Russia or Europe, all global markets are going to take a massive hit, because that will create chaos. Who knows what the ramifications of that are? So let's hope that never happens. I'm fine with a black swan event. I'm fine with a computer malfunction. I'm fine with, a refinery explosion or something like that. Great. But no nuclear stuff, man. Let's not even think about that. We don't want to think about that at all. That'd be horrible. But to Michael's point, you would have those markets locked down most likely several days in a row if we had something that catastrophic to our markets. Margaret says, we have problems with our electrical grid. So if we had problems with our electrical grid, it's interesting to think about these things, right? One of my favorite TV shows, guys, is I like crime shows. I like CSI, Criminal Minds, NCIS, because it's a puzzle. And you're running through your mind a hypothesis of, okay, well, if this happened, this happened, this happened, it has to be that person. No, hold on. It could be this happened, and that happened, it's that person. I like games like that. I like to keep my brain going. And I think the markets are exactly like that. So to Margaret's point right here, she says, we have problems with our electrical grid. I would say we do. I'm not an expert in that, but I think that we are putting more and more pressure on our grid each and every day, particularly more electric vehicles keep coming online. Well, what would the impact of that be, right? So if you're thinking that, Margaret and others, I think it'd be very important to look at the grid structure of the United States. Like, what are the different grid makeup? What's the composition? California and San Francisco, California and Texas and New York are not on the same grid. We've all got different zones that we're in. What's powering which ones, and what are the vulnerabilities? Now, let's say that one of the major grids, let's say New York goes down, and the whole New York City grid just crashes and comes to a halt. That will most likely create a significant sell-off in the market, because people are going, what caused it? Was it a terrorist attack, right? That's the first thing that's going to come to mind. It's the first thing the movie was going to say. If there's a terrorist attack, then people freak out and the markets will crash. The grid will be back up quickly. I mean, it's not going to be down for weeks on end. It will be down maybe for a couple of days if it's a big attack. And I think would come back online and the markets would recover fairly quickly. That would be a short-term one. One that, I didn't even want to say it. No, I'm not going to say it. I'm not going to bring it up. There's one in my mind that's like one of the most evil, sinister attacks that could happen on U.S. soil, and I hope it never happens, which I'm not even going to say it because I don't want to put it in anybody's heads. But yeah, I think those types of things create black swan events, which I like black swan events, particularly when you look at the broader market. I'll tell you this. Actually, let me ask you. Let me do a poll here. Let's see. Start a poll. If a 1 second here, I've typed this one in. It's so tough to type and talk. Black swan hit and markets crash 30%. And when I say just so you guys know, when I say a black swan hit, let's say it's Margaret's example that multiple electrical grids in the United States go down. I don't have enough space to type that. Multiple black swans hit. Okay, there you guys go. What do you guys think of this one? Hopefully I typed it in correctly. It says, if a black swan hit, electrical grid down, and markets crash 30%, would you be a buyer? Just curious what you guys would think. All right, Oliver, conspiracy. I don't like to be a conspiracy theorist, but you have to play these events, and what would you do? I can tell you right now, I know exactly what I would do, but I'm just curious what you guys would do. We know on our day-to-day trades, at least most of you know, here's how I trade. Here's my rules. Here's my entry, my exits, my stop loss. Here's my discipline. Here's my risk management. Here's how I control all the variables around me. But sometimes there's things that you cannot control, and it's our job to look at those external factors and say, that's out of my control, but the pieces I can control, how do I apply that to this unforeseen event, to this black swan event that happened? And for me personally, if it was just an attack on the grid, or the grid went down, preferably it just went down from natural causes. I think we had one a few years back where lightning hit a specific relay signal, and it shut down all the electrical to parts of Canada and East Coast, I believe. That was several years back. That type of thing, I'm an absolute buyer. Let's see what we got here. We only got a few people. Man, we got a small crowd. Only 20 of you voted on this one? Slackers. If a black swan event hit, electrical grid was down, and markets crashed 30%, would you buy? 85% of you said yes. 15% said no. I am squarely in the buy category because that's not changing fundamentally the structure of America. It's not destroying anything. It went down for a reason. Now, if it went down because there was a terrorist attack and there were explosions and bombs and RPGs and stuff going at it, I might feel a little bit differently because that's going to keep that grid down much longer. But long-term, electrical grid going down, I don't think is going to be that big of a factor for our markets going forward. So, well, talk about going down a rabbit hole today. Thanks, Margaret, for that one. I appreciate it. Anyway, I hope that I calmed your angst there, Michael, a little bit. It is a criticism. It is a criticism, and it's okay. I welcome criticism. You did it in a very friendly, happy way. It's okay. And at least I get a chance to explain myself. But, yeah, there we go. And what did I have here? There's one more. So John asked me to give updates on my portfolio. I don't usually like to. I've had multiple requests for this. So bottom line is this. My portfolio is my business. It's my job. It's my work. And I do this show because I enjoy talking about the markets. I love the environment that we have. And it allows me to think out loud a lot of the trades and things that I'm thinking about doing for my portfolio. Many of you, or some of you, have asked, why don't you post your portfolio so we can follow it? First off, I don't want you to follow my portfolio. When things go wrong in my portfolio, I don't want to have you coming after me saying, oh, hey, you were in this trade and I lost money. I don't want that to happen. You need to make your own decisions. There has been thought on my part that maybe down the road I'll start a subscription service and maybe do a live room where I'll do live trades and have my portfolios, because I have a lot of different accounts. I've got dozens of accounts, and have those accounts transparent where you can see the holdings at all times. But I don't like doing that. One of the reasons I don't do stock picks anymore, I used to do a thing for Power Trading Radio called the Power Pick of the Day, which was, here's a stock, here's the stop, entry, and target on this, and here's the trade to make. And some guy messaged me weeks later talking about how I cost him all this money and he was going to sue me. I'm like, what are you suing me for? You took the trade. He's like, well, but I lost so much money. I said, well, where's your stop loss? Well, I didn't use one. Well, my pick said entry, stop loss, price target. So I just decided not to do those types of things anymore. But for just as the higher level, you guys know some of the positions that I'm in. It would lead to better drinks. I'll run through some of them. So you guys know I currently have Rivian. I have a few thousand shares of Rivian, but I sold the 1050 calls against it. So let me just mark in the 1050 here so you guys can see what coordinates, and I'll drop this into 1050. So I bought some Rivian at 11, I bought some at 9, and I sold the 1150 calls. By the way, the premium on this is awesome. The premium is great on Rivian. It's all over the place. We almost got to 1050 today on it. And if my shares get taken away from me, great. Because I collected a lot of premium on the 11s. I collected a ton of premiums on the 9s. And then I also collected a lot of premiums on the 1050s. So I'll have to do the math at the end of this to see what the rate of return is. But it's going to be a damn good one, even though it looks like Rivian is struggling here. So I'm okay with this one. If it gets taken away at 1050, that's fine. I personally hope it does not. I'd like to see this close on May 17th at 1049, and then I'll probably sell the $12 calls or something higher. I think Rivian's going to continue to drift up. I don't see a monster, huge recovery, but I see it drifting back up here. Again, this has got major money in it from Amazon, which is going to be, I just don't think they'll let that one die. So that's one of the positions I have open. I actually did buy Snow, which I'm not a fan of. But when this thing had their horrible earnings, I actually ended up selling like the 160s and got a lot of premium on it. And it actually was underwater for a while on me, and now it's back up, and I've been selling calls against that one. So I'm positive on this one now, but it's been a little bit of negative, just selling calls against it. Right now I have the, what calls do I have against this? Hold on one sec. Let me just bring it up and so I can read the numbers to you so you know what my calls are at. So we can, when they hit, we'll just say it's done. I mean, it's been a really good week for Snow. I have the 167.50. So let me put that on there right now, just so we can have that on there. 167.50, 167.5. So there's my level that I got for the snowflake ones. I see a lot of Rivians on the streets now. You know, Oliver, that's part of the reason why. I see Fiskars on the streets, but I know Fiskars filing for bankruptcy, but there's only a few of them. I see a lot of Rivians. I see a lot of very happy Rivian customers. And then I see that they're also getting, big money to move their plants to Indiana or something like that, to build out there. They have the infrastructure. They have the production going, which from Elon Musk's perspective was one of the toughest things to do. So I think Rivian's going to do okay. I think it'll be a decent competitor to Tesla going forward. So yeah, I wanted to own Rivian, but I sometimes I get caught. I'll sell calls against positions I have to get extra yield, and most of the time those calls will expire worthless. I keep the premium and I do it over and over again, right? Why not? Why not generate extra premium? In situations like what happened with Tesla last week, you guys remember I had Tesla, and I had the Tesla calls which I sold at 165. And I thought after this big green candle here, after the earnings, we'd have a little bit of a pullback. So I didn't want to get rid of my Tesla, and it rallied up to, what did we rally all up to? A high of 198. And of course, I'm kicking myself for that, but it's okay. It's okay. No problem. You talking about rolling over of options, Rob, or rolling over of the Rivian, meaning the card doesn't, oh, what? Disconnected. What else do I have? I did take some Boyle. I very short-term trade here on Boyle. We'll see. I might dump this one on beginning of the week because I was kind of just playing this small range that we're in here on Boyle. And, you look at this 15.19, it hasn't been above really $15 for months. So I will probably unload that there. It's a double leverage long natural gas. I sold puts on Cleveland Cliffs, which is CLF. I think steel is a good one for the U.S. And they've had such a horrible sell-off here. Where's your local Rivian dealer? I believe it's Long Beach, if I'm not mistaken. I didn't see one around here, but Margaret, I'm the worst person to ask for that because I stay in my small, very, very tiny little bubble here in Orange County. Like I don't go places, so I wouldn't know where the local Rivian dealer is. Great question. I could look it up, but it's kind of embarrassing how close I stay. It's funny. I have a friend that lives up in Los Angeles, and she's like, "Oh, come visit." I'm like, "Nah, I'm not going to LA. I'll go up there." Okay, so Cleveland Cliffs, I have right now the 1750 puts. I actually sold them a week ago, and we'll just, I'm fine owning Cleveland Cliffs, right? They're steel, so I'll go 1750 is my strike price for that. And again, I sold them after this really significant sell-off, and I really wanted to get them below this area of demand, or at this area of demand that goes back to Friday, the 19th of January. And it knifed through that back here on Tuesday, which, was fine. I'm not too concerned about it. And then it kind of ripped back up here. We'll see what happens. I've got, again, till the 17th on that one. What else do I have? I already showed you the Starbucks. Oh, I got a lot of SLV. So these are some of the major ones that I have in my portfolio, some of the bigger positions, SLV, right now with that 2350 call. So, or sorry, 2050 puts. So, John, that's it. Other than, shorter term stuff I'll do with futures on the day trading side, those are some of the bigger positions I have. But, yeah, I'm not going to post it. And I don't know. Part of it is I don't like bragging about winning trades. I actually share most of my losing trades. I think that's how you learn you improve, is you share what's causing you to lose money. And hopefully that's been helping some of you over the years or resonating with you as well. But generally, I don't really like to show the winning trades. I mean, I like to show trades I'm in and as they're going. But Rob says, show your winnings. Why not? Because this is my perspective. Trading is not about making money. If I make money on a trade, so, that Tesla trade, I made money on it. The silver trades I've made good money on those. But I don't want to, it's not like, I don't like boasting about it because did I do anything special? Did I do anything outstanding that caused me to make money? No, I'm just doing my job. I'm just planning out the levels. I'm looking at whatever my strategy is for that specific setup or that specific trading account. I'm saying, here's my entry, stop loss, price targets, and I follow my rules. So if I have a nice big winner, great. That's fine. I don't think it's anything to boast about. I think it's just you did your job, so shut up. And I firmly believe that the markets have ears. And the more that you talk about how good you are as a trader, the more you talk about your great trades, the more you talk about your success rate, I believe that the market has ears, and that will come down heavy on you in the future. The market will kick your butt up and down the street. I'd rather talk about my losses. I'd rather just say, yep, I trade, and let the winners do their thing and not boast about them. But that's just me. I've found over the years, I could name 5 people particularly, very specific people that are good examples of this, that they always talk about how much money they're making, and I've actually seen their trading sheets through their brokerage firm, and they're losing money. There's 2 people in particular that I know, actually 3, from the old trading floor days. Ray, Mike, and Jason. These 3 guys were the ones that you don't know what they did. You couldn't tell whether they're having a good day or a bad day. They came in and just, left the building and everything was fine. But because I had access to the back office, I could see the people who were really making money. And those 3 guys were destroying it. They were killing the market. They didn't say a word. They went on. And the one guy in particular, who maybe it's a chapter in my book, but I won't go too far in it, he always bragged when he had a big winning day. When he was up 10, 20, 30,000, ABC World News Tonight was there on the trading floor. The kid made $80,000 or $60,000 in one day. In that same day, he did 10% of the trading volume of Dell. Imagine you did 10% of the volume of one stock by yourself. Insane. And it was Dell. This wasn't like a small, non-existent company. That day made 60 grand. And of course, he was a friend of mine, so we went out and we partied like rock stars. Bottle after bottle everywhere. Coming to find out, the reality was, this guy was one of the biggest losers on the trading floor because his risk management was non-existent. And while he would take huge risks and just so happened to be on TV that day when he made 60 grand, the next day loses 20, next day loses 30, next day loses 50. For the week, he's down $30,000, $40,000 and he made 60 grand in a day. And what did he do? He bragged about how much money he made that day. He never talked about his losses. So for me, I take that to heart. So yeah, I don't really like talking about my winners. If a trade does exactly what I thought it was going to do, like it hit my entry, it ran perfectly in my target, and I scaled out half and it hit my second target, and it did perfectly, I like to look at those ones and go, that was a good trade. Because it did, I mapped it out and it did exactly what I thought it was going to do. I followed all my rules. That's worth bragging about. But if I have a trade, and I'll be honest here, if let's say I buy this, let's look at this Rivian, right? Let's go back to this RIVN. Let's say I buy this Rivian, or I already own Rivian, so I'm currently long Rivian, but I do think Rivian's going to be going up. And, let's say, I think that you'll probably see it drift up. I think you'll see it struggle a little bit right around this 1150 mark. I think you'll see it run probably up to that 13. So let's say my target was sell some at 1150, sell some at 13, right? That's my plan. If all of a sudden Rivian comes out and they say that they made a huge deal with somebody and they jump up to $25 per share, I'm unloading everything I've got. And I'm not going to come on this program and be like, guys, I made so much money on this Rivian trade, because it wasn't what I expected it to do. It didn't do what I thought it was going to do. It did way beyond it. And I don't think that's worth gloating about. I think part of the thing that makes good traders is being humble. I think you need to be humble in your trading. And remember that the more braggadocious you get, the more you want to gallivant your winnings and boast to everybody. And, this is why I hate Sam. He'll sit there, and even though most of them were paper trades, he'll sit there and say, oh, this trade made $2,000. This trade made $10,000. No, it didn't. It was a paper trade. You didn't even take that trade. That's a lie. It's fabricated. It's not true. But that's used by many people who are selling courses to get you to take their courses. Oh, look at me. I'm an amazing trader. On paper, yeah, everybody's amazing. On paper, I'm 6'5", 350 pounds with a chiseled chest and no beer belly. In reality, it's not quite the same picture, is it? Anyway, it's bullish from demand zone below the low of the curve. Yep, you're right, Rob, which is why I like Rivian. Anyway, how do you get access to the back office? So this was back in the late 90s, Margaret, when I worked on that trading floor. So there was really no separation between back office. And at the end of the day, what they would do is there was like a filing cabinet structure that you could just put in pieces of paper. And I knew what my account number was. So I would go to mine, grab my statements for the day and look at them. Well, I would walk by Adam's and just go like, oh, wow. Because when Adam would have a bad day, let's say he loses $50,000, he just storms out of the building. I'd go over to his box and just look at it real quick and be like, oh, man. Jeez Louise, that's bad. And I could see exactly what he did. And you start to learn the bad stuff people do that costs them money, which is probably the single most important lesson in all of trading. It's not a strategy. It's not a tactic. It's not an indicator. It's like, what costs people the most in trading, right? What causes people to lose everything in trading? That's the most important thing to you and to me. Because if you know that, then you won't do it. You won't lose everything. Sam is 5'5". On a good day, I think he's got insoles in it. He might be 5'4". But with his ego, he's 6'3". Okay, let me go off that topic before you guys get me all irritated with the Sam discussion. And I think that's pretty much. One last piece. This is from Mike LaRusso. I don't know if you're here, Mike. He sent this one in. Let me read this. It's kind of a lengthy one. He says, I was looking at Tesla and saw that there are 9 other optionable derivatives, pro shares for Tesla. I was looking at one of them, TSLL, which is 2x bull ETF for Tesla. If I think that Tesla is making a turn, which I do, why wouldn't I buy this ETF instead of TSLA? It seems like it might move up proportionally higher and give a much better long-term return. Do you concur, or am I assuming it will move higher if Tesla goes up 10%, TSL may go up 20% incorrectly? I did sell some puts on this Friday because I calculated the rate of return to be 1.14%. Okay, here's the problem. And I made this point out. I need to do a specific show, but guys, I apologize. I have been so unbelievably busy. I have not had time to just sit and dedicate time to the show. I've been wanting to do one which shows the degrading effects, deterioration effects of leveraged ETFs. So you mentioned in here, might make a portion, which much give better return long term. It will not give you a better return long term. It will deteriorate over time. The longer you hold TSLL, the worse it's going to be. So let's go here and here are some of those ETFs. I put a couple of them on here. I'll go as all the data because these are relatively new. They're only 437 days old. So if you look at Tesla's in red, Tesla's down 40%. Down 40. Okay? So you guys tell me, type it into chat. If Tesla is down 40%, then what do you think the inverse Tesla should be? So let's say it's the last year plus. You went long the bearish Tesla. You went long bearish Tesla. And Tesla is now down 40%. What should the inverse be? If you bought long the inverse ETF of Tesla, what should your rate of return be? Remember, Tesla's down 40%. So the inverse should be up 40%, right? It's not the case. Look at the inverse. This green one here is the inverse. No, this is not 80. It'd be up. It should be up 40 if it's 1-to-1. If it was a double, Rob, or double less, it'd be up 80. I believe this direction is a single. I can check that in a second. But notice right now, it's only up 1%. It should be up 1%. Or it should be up 40. This is because of that deterioration. Hey, Mike. So I think if you want the extra volatility, these leverage ETFs like this Direxion one here is double long, which is down almost 70%, 64% slide. And that also doesn't make sense, right? Tesla is down 36%, which means the double long should be down 72. It's down 64. So these aren't exactly right. And the longer you hold them, the worse they get. It's really, yeah, no, I figured you did, Les. Nope, I figured you did. Yeah, so this green one here and this red, the red one is Tesla, the green one is the inverse, 1-to-1. You know, the middle black line here should run right through the middle of them all. But what you notice is there's a decay. There's this slow decay of any leveraged ETF. Why isn't this 1-to-1 inverse up 40%? Right? We're led to believe that they're going to make 40%, or a double short would be 80% higher. No, the longer you hold these, and if you went on for another year, even if Tesla was down like 70%, this thing would probably barely be break even. And you're like, but wait a minute, I called the direction correctly. I went short Tesla using the ETFs. Nope. Yeah, Oliver, it's a trap. Oliver Akbar, it's a trap. Yep, Andres is right. Andres is correct. It has two things. It has to do with the daily rollover calculation, but also the derivatives that they're using for those leverage ETFs. So they're using combinations of options and futures depending which one they're in. And because of that rollover of contracts, also time decay, Rob, it's a factor of time decay, rollover, and the contract specs pieces that cause it to deteriorate. So they are great for day trading, right? They do reset every day, and that's part of the problem. You know, when something drops, if something drops 5%, you got to make 10% to make that back. And that rollover calculation makes it difficult for them to go. Why did you do the leverage? Well, because this is just a couple day trade. I was planning on this being like a 3 or 4 day trade for me. I'm not holding it long term. I wanted that leverage. I wanted that extra bite, which is 2 to 1. But do not hold them long term. I'll give you another good example of this. Let's go UNG and Boyle. Oops. UNG obviously is natural gas. BOI. Okay, Merlin. Jeez, what's going on here? Comma. BOIL. Goyle? Okay, so there we go. So let's put these two on here. And hey, natural gas, this is brutal. So natural gas is down 46%, and Boyle is down 77%. It's not 2 to 1. It should be more than that. It should be more than that. And if I go even longer term here, oh God, this is really ugly. I go back to 2000. These charts just don't really help because they don't oscillate. They seem to always go down. Long term, natural gas is down 97% over the last 3,000 days, and Boyle down 100%. This thing is reverse split so many times, it's just pretty much zero. So just keep that in mind. You know, one thing you can do, look, if you look here and go to SPY, SDS, SH, SR, what are all the, I forget all the different leverage ones, but this is a single, the S&P 500, SH is inverse 1 to 1, and SDS is double. Let me show you that one real quick. Okay, so the red line is the S&P 500. Red line is the S&P 500. The green line is short S&P 500. And then, let's say PS. SDS is double short. So if we go back just 200 days, the S&P is up 14.29%. The single is only down 6. Weird. And the double is down 17. And the longer you go, the worse this gets. It just gets worse and worse and worse and worse and worse. So anyway, I'll do a special show, I think, at some point on it because I think it's pretty important to people understand. Do not hold any leverage ETF. I don't care whether it's, we got Tom here who loved FNGD or FNGU. That'll kill you long term. Even if you're in the right direction, you're losing part of that gain. So if you call it perfectly right, so Mike here is talking about if I want to go long Tesla, which I think it's going to be great, long buy TSLL. Okay, you could go long TSLL. You're not going to get that double. You might get a little bit more than the single one, but you're also losing a piece of that every day because of time decay and the way that rollover is done, right? So the longer you hold it, the more vulnerable you are, the more susceptible you are to those compounding impacts of rollover, etc. And dang it, it's a 1 hour show. Why do you make me do this? Why? Serenity now. All right, that was my last one, Mike. Hopefully that helped a little bit there. Let me go to your economic calendars and earnings calendar, and I'll show you what's actually earnings. Oh, there are some good earnings for Monday. So let me bring up the Forex Factory page here, and I can get out of here. If we look at what's happening for Monday, next week is very, very quiet for the markets, at least in the U.S. We do have a lot of stuff happening internationally. Held TBD for a couple months is not going to hurt you too bad. But if you're going throwing this in your IRA 401ks, you're in trouble. You're in real bad shape. We do have a rate announcement. That's going to happen. It's technically Tuesday morning. So these times here are Pacific times. It'll happen just after midnight, a rate announcement for Australia. They're expected to come out at 4.35%. And then let me go to your earnings calendar here because we have a few on Monday. And then I have to wrap this up. And my poor dog is getting upset and wants to go to the dog park. I can hear him yelping downstairs. Let me go. I want to go to the dog park. So here's what you got cooking for Monday on the earnings front. You've got Vertex Pharmaceuticals, Palantir, and a lot of people here like Palantir. You got Microchip, you got the Williams Company, Simon Property Group, and that's pretty much it for your Monday session. So that's going to do it for me, everybody. If you have things you want to know The Berkshire Hathaway event is tomorrow. Are you going to Omaha, Oliver? Can you go out there and check that one out? If you have things you want me to discuss on Monday's show, let me know. You can email me, TraderMerlin@gmail.com, or as some of you have done, put them down below the YouTube videos. Always like to see those comments, and I'll put them into the materials like today, like we saw the 3 or 4 questions that I answered for you guys. So thank you guys so much. Have a fantastic remainder of your weekend. Cheers. Happy Friday. Do something fun this weekend. I will see you on Monday. Take care.